And there you have it, the closing bell at the New York Stock Exchange, ending another day of trading on Wall Street. The Dow Jones was up and down throughout the day a bit, but ended relatively flat at about 44 points up. The S&P 500 was up around 0.5%. The Nasdaq was up around 1.5%. Dade Hayes, Deadline business editor and co-author of the streaming book Binge Time, joins us now. Dade, welcome. Great to have you with us. So what drove the market sort of nowhere today, ending flat?
Well, I think it was a bit of a relief rally, certainly in my neck of the woods, which is media. I think people were looking at Netflix. Obviously, that was a big quarter. It's crazy to think that they beat expectations, losing almost 1 million subscribers year on year. But that was the story. Interesting.
All right. But, digging into that a little bit, it did take another, as you said, major hit to its subscription numbers. It lost 970,000 users during the second quarter. Why was it anticipated to have lost more than that? Because like you said, loses a bunch of viewers and the stock actually makes gains. Can you explain that a little bit?
Well, it's always climbed a wall of worry. That's the old Wall Street cliche, right? Netflix has managed to spend, and for a long time they were cash flow negative. That was a big turning point yesterday as well. They showed pretty substantial cash flow and profitability, and nobody else in streaming can say that. I think it's just they're the king. Nobody else has taken them out, and people believe in their story.
So they do seem optimistic. Investors seem optimistic in the direction Netflix is going, including some possible ad revenue that might come out. How will inflation and rising costs, though, ultimately impact the business model? It will have to change at some point, correct?
Yes, they're looking for advertising to really kind of offset the challenges they're going to face selling subscriptions. Their most popular plan in the U.S. is $15.49 per month. It's the highest in the market. So they're going to have some alternative for people who are being more cost conscious. Advertising could be anywhere from $1 billion to $2.5 billion a year by the estimates of several analysts. So it's meaningful cash flow. It's also they say the unit economics in ad-supported streaming will be better than what they do in pure ad-free subscription streaming, which is interesting.
Gosh, $15.49 a month. I hope I'm not paying that. That is really high. When I think about all of these streaming services that we all signed up to, it was sort of an effort to get rid of cable, right? Lower that crazy cable bill. But when you start adding up all of these subscription services now, I feel like I'm paying more than I used to pay for cable. I mean, are a lot of Americans making that calculation?
I relate to that. We write a lot about that in our book, Binge Times. I mean, it's basically the rebundling, I think, is where we're going. Disney was very savvy in creating that bundle with Hulu and ESPN Plus.
Right.
I know that I wouldn't individually subscribe to all three, but it's not a bad bundle.
Right. All right. Well, Dade Hayes, we thank you so much for joining us. We appreciate your insight.
Glad to be with you.